Welcome to our channel, where we offer valuable insights and practical tips to help you navigate the world of personal finance. Today, we have an exciting topic in store for you: Investing 101, a beginner's guide to building wealth. Whether you're new to investing or looking to expand your knowledge, this video will give you a strong foundation to embark on your journey to building wealth. Let's get started. Part 1: Why invest? One common question beginners ask is, why should I invest? Investing is crucial because it allows your money to work for you. Instead of keeping your savings in a low-interest savings account, investing enables you to put your money into various assets that have the potential to grow in value over time. Investing offers the opportunity for your money to grow exponentially through compounding. Compounding is when your investment returns generate additional returns. Over time, this compounding effect can significantly increase your wealth. Additionally, investing provides a way to combat inflation. Inflation erodes the purchasing power of your money over time. By investing, you have the potential to earn returns that outpace inflation, helping you maintain the value of your wealth. Part 2: Setting financial goals. Before diving into investing, it's important to establish clear financial goals. By having specific objectives, you can tailor your investment strategy to meet those goals. When setting financial goals, it's essential to consider both short-term and long-term objectives. Short-term goals may include saving for a down payment on a house, purchasing a car, or going on a vacation. Long-term goals often revolve around retirement planning, ensuring a comfortable lifestyle after you stop working. Identifying your goals involves a systematic process, including quantifying the amount of money needed, the timeline for achieving each goal, and your risk tolerance. By defining your goals, you'll have a clearer direction for your investment strategy. This clarity will help you stay focused and make more informed investment decisions. Part 3: Understanding risk and return. Investing involves risk, and it's crucial to understand the relationship between risk and return. Different investment options carry varying levels of risk, and it's essential to find the right balance that aligns with your risk tolerance and goals. Different investments, such as stocks, bonds, and real estate, have different risk levels. Stocks, for example, tend to have higher potential returns but also higher volatility. Bonds provide more stability but may offer lower returns. Real estate investments can offer a mix of income and appreciation potential, but they come with their own set of risks. Diversification is a strategy that can help manage risk and maximize returns. By spreading your investments across different asset classes, industries, and geographical regions, you reduce the impact of any single investment's performance on your overall portfolio. Part 4: Investment vehicles and options. In this section, we'll explore various common investment vehicles and options available to beginners. It's important to understand these different options to make informed decisions. By understanding these investment vehicles, you can choose the ones that align with your goals, risk tolerance, and investment preferences. 1. Individual stocks represent ownership in a specific company. Investing in individual stocks requires research and analysis of the company's financial health, competitive position, and growth prospects. 2. Mutual funds pool money from multiple investors to invest in a diversified portfolio of stocks, bonds, or other assets. They offer instant diversification and are managed by professional fund managers. 3. Index funds are a type of mutual fund that aims to replicate the performance of a specific market index, such as the S&P 500. They provide broad market exposure at a low cost and are known for their passive management approach. 4. Exchange-traded funds, ETFs, are similar to index funds but trade like individual stocks on stock exchanges. They offer the flexibility of trading throughout the day and provide access to various asset classes and sectors. Part 5: Building a portfolio. Building a well-diversified investment portfolio is key to mitigating risk and maximizing returns. It's important to spread your investments across different asset classes, industries, and geographical regions. This is called asset allocation, which refers to dividing your investment portfolio among different asset classes, such as stocks, bonds, and cash, based on your risk tolerance and goals. Part 6. The importance of research and due diligence. Research and due diligence are vital when it comes to investing. It's important to thoroughly analyze investment opportunities to make informed decisions. Understanding key financial metrics, such as earnings per share, price-to-earnings ratio, and debt levels can help you assess the financial health and growth potential of a company. Staying informed about market trends, economic news, and industry developments is also essential. If you don't have time to do your own research or manage your own investments, consider seeking professional advice when needed. A qualified advisor can provide personalized guidance based on your unique financial situation and goals. Part 7. Long-term investing mindset. Investing is a long-term endeavor, and maintaining a disciplined mindset is crucial. It's important to avoid making impulsive decisions based on short-term market fluctuations. The best approach is to stay focused on your long-term goals and create an investment plan that aligns with them. Emotional decision-making can lead to buying or selling investments at the wrong time, potentially harming your returns. Therefore, it's important to manage emotions to make rational decisions. Similarly, the power of consistency and patience in building and preserving wealth cannot be emphasized enough. Regularly contributing to your investment accounts, even during market downturns, can help you take advantage of dollar-cost averaging and potentially enhance your long-term returns. Congratulations! You've completed our beginner's guide to investing. By understanding the fundamentals, setting clear goals, and making informed investment decisions, you're on your way to building wealth. Remember, investing is a journey that requires continuous learning and adaptation. Stay curious, seek knowledge, and implement what you've learned. Don't forget to regularly review your portfolio, adjust your asset allocation as needed, and stay informed about market trends. Investing has the potential to generate significant long-term returns and provide financial security. Thank you for watching, and we hope you found this guide helpful in your investment journey. If you found our video helpful, we kindly ask you to show your support by liking and subscribing to our channel.